Hello, hello. Welcome to the weekly home workshop. I'm Terry Taylor with the Tailored Realty team. Every Wednesday at 12:15, uh, we spend about 15 minutes during your lunch break talking about real estate topics for buyers, sellers, investors. It's simple, it's practical, it's easy to understand. If you're joining us live, thanks for spending a part of your lunch break with us. If you're catching the replay, you are also in the right place. Let's go ahead and jump into today's topic where we're talking about what credit scores really mean when buying a home. And believe it or not, this is a topic that needs to be discussed. It may be some things that you're aware of, some things that you're not aware of. But yeah, your credit score does matter and it does count. Now, I'm in a different location on today, so my setup's slightly different. You may see me looking to either my left or my right and get my bearings straight on a couple of things. So I do have things set up a little bit different on today. We'll see how this works out. But we had a busy day on today, so I worked from a different location. But we're going to go ahead and get started. Let's jump right into why credit scores matter and that they play a major role when you're buying your first home or whether you're buying your first home or an investment property. What's your credit score all about? What's it for? Well, it helps the lenders evaluate risk. Don't forget when you're purchasing a home, buying that first home or buying a home, it's a big purchase and lenders are giving you a lot of money, right? They're giving you a lot of money. And what they want to do is they want to protect their interest, right? They want to protect their asset. And so your credit score is just one of those factors, one of the tools that they use to determine whether or not this is going to be a smart investment for them. What exactly why does it matter to and what is it doing? What can your credit score affect? Well, it can affect your loan approval, right? So if you have a good credit score, the likelihood of your approval goes up. The lower your credit score, of course, the likelihood is going to go down. It can affect your interest rates. You want to get the best rates you can possibly get, and those come with good credit scores. Also, your monthly programs, your monthly payments, excuse me, and then your loan programs. Monthly payments will be affected by your credit score. But also, don't forget, and if you don't know this, there are a lot of loan programs out there, grant programs to help first-time home buyers or even certain economic um, areas are trying to be revitalized. So there's sometimes programs that are available to lend to buyers. Those programs will go out to the ones with the better credit scores, obviously. So those are some things that you want to consider whenever you're thinking about um, your credit score. Now, your credit score doesn't define you. It doesn't make you a bad person if you got bad credit, but it just affects your buying power. And we want to make sure that you're doing things that's going to put you in a positive position to make that home purchase. And trust me, it's probably one of your biggest purchases you're ever going to make. So why not keep your credit together? I know growing up years ago, that's one of the things that was preached to us as we were getting ready to go out into the world. Our parents used to always talk about not messing up your credit, making sure you keep your credit in good standing. So to keep your credit in good standing, what does that mean? What makes up a good credit score? And there's a few things that we'll look at. Um, Payment history is one thing, and credit is all pretty much. If we wanted to lump it all up, it's your payment history over time is really one of the things that they're looking at. So your payment history and your ability to make payments over a time frame, and that's kind of what you're thinking about when you're thinking about credit. What else makes up a credit score? What are your balances? What kind of credit card balances or loan balances do you have on the books? Those things are going to affect your credit. Uh, I know even in the real estate industry and property management and doing different things, one of the things we look at is credit score. So even when you're purchasing a home, and we'll see credit reports come across our desk sometimes, and there's a whole bunch of stuff on these credit reports, and we just know that your ability to make these payments is going to be tough based on your current outstanding credit. So if you can, please maintain your credit, keep it at a good level, so that you can do things when you're ready to do them, right? And that comes through planning. That comes through making sure you're not overextending yourself. I know a lot of times they're going to look at your debt to income ratio, things of that nature. So, also, what types of credit do you have? Is it revolving credit? Is it fixed credit? Whatever type of credits you're extending yourself. Are they loans? Whatever it is. Is it a car loan? Is it multiple home loans? Whatever. Uh, Make sure they're going to look at how much money you make, how much money you spend, and how much credit you got extended out there. Also, don't forget, anytime you get inquiries made on your credit, those are hits as well. Now, I'll let you talk to a lender or someone who does this on a more regular basis, but I think there are ways that I think they call them like a soft pull. And so that way it doesn't hit your credit quite as hard. So you want to make sure you're not getting too many inquiries on your credit, especially when you're in the middle of a home buying process. So those are some things that you want to keep in mind. So one of the most important things whenever you're keeping your credit together is just make sure you're paying your bills over time, right? Consistently over time. And that consistency is really what matters more than just perfection. Will you miss a payment occasionally? Sure. And creditors know things come up. A lot of times, even if things can be explained, those are going to way more favorably in for you. They'll work more in your favor if you have a reasonable explanation for maybe why you missed a payment or why a payment was late. And I know even in the industry I'm working in, and sometimes even dealing with property management, um, it just makes a difference when you can call and say, "Hey, this is what's going on. Here's what's happening." I think it always works in your favor when you can communicate. So communicate with your lenders, communicate with those that you're trying to pay back over time, especially if issues arise. Don't make them hunt you down. Don't make them try to call you every time to see what's going on. So if you can be consistent, make those payments over time, and those are the things that will make work favorably for you. What's some common credit mistakes buyers make? Believe it or not, once you get approved for the loan, that is not the end of the process. And one of the things that we make consultations with our buyers on is once you get approved, do not make any large deposits, large withdrawals. Don't extend any more credit without talking to your lender or your mortgage loan officer first. Make sure you talk to somebody before you do anything. Um, I've seen this. One of the common mistakes is opening credit before closing. A lot of times you're going to have to furnish your home. Sometimes people want to get new appliances and new furniture, and all of that is understandable. The only thing is you have to make sure you do it at the right time, because even though you've been approved for a loan and you've gotten the loan approval, that doesn't mean they stop looking at your credit. Quick story. I know Yolanda years ago when she was first getting started. And again, we always had consultations. I'll be careful with saying always. We often tell our clients, make sure you don't go out there and extend any credit. Make sure you keep your credit in good standing throughout the process, because we don't want anything to happen at the end. Can't remember if it was an inspection or a final walkthrough, but Yolanda was waiting on the client. The client pulled up in a brand new car, and Yolanda's eyes popped open and she was like, "Uh-oh." And so they got out and she asked him, she said, "Hey, nice car you got there. Whose car is that?" And they said, "Oh, it's mine." And see, Yolanda had seen them earlier and knew what they were driving. So when she saw the new car, it was like, You got to be careful because guess what? If you show up with a new car and you haven't discussed it with your lender and it changes your debt to income, it changes the situation, you may wind up living in that car. That car, you may wind up, going back to square one. And that's exactly what happened. This particular client was not able to make that purchase. They couldn't purchase the home because they had purchased a new car. So you can't make large purchases. You can't carry real high balances. And believe it or not, those large deposits and large withdrawals, even though that's not credit related, anything that changes your picture, your financial picture, is something that underwriters and lenders are looking at. So just be careful. There are some common mistakes, but just remember, just because you've been pre-approved and we're marching down the path to home ownership, that doesn't mean that the lender stops watching. They're constantly watching and they want to make sure your financial picture hasn't changed. Um, so what should you focus on? And I think we said it quite a few times here. Keep your balances manageable. Um, Pay your bills on time. Avoid missing payments. And I think we say this more times than not. Just make sure you talk to somebody before you do anything. Specifically, when it comes to your loan paperwork or your loan documents or the lending part, speak to your lender. And while we're at it, again, this is no knock on any of our clients or anybody because we certainly appreciate the relationship. But your real estate agent isn't necessarily an expert on the lending process, although there are some agents and some realtors who do have, I know a few who are also lenders. If they carry those two hats, then yeah, they know what they're talking about. But if you got a lender separate from your real estate agent, talk to your lender before making any financial decisions during the home buying process. We'll let you know about those upfront costs. And quite frankly, go to our YouTube channel. We got a pretty good catalog that we're building that gives you some insights on some of the things, the cost of home ownership, the cost to sell a home, because there are some costs involved. However, before you make those big purchases, those big deposits, those big ticket items, speak to your lender first. What you'll find during the home buying process is that communication is key. And I think that's where we see a lot of times people go off the rails, and that's where they miss out on certain deals. We talked about it in previous episodes. Sometimes if you're chasing a rate, you can miss your opportunities. We've said this in previous episodes. Um, you marry the home, you date the rate. And that all that says is if you're looking for the right home, once you find it, if it's the right timing for you, go ahead and pull the trigger. You can reevaluate your credit might get better. You can reevaluate rates at a later time. Same thing with your credit. If you know you're getting ready to start building a home, go ahead and start talking to lenders, talking to somebody in banking just to see, hey, maybe see where your credit score is, manage and maintain, start doing things to put yourself in a better position to get a better rate or to have a better credit score so you can get a better rate. Your monthly payments can be a little bit lower and your buying power increases whenever you have good credit. So just encouraging you again, remember these episodes, they're not earth-shattering, groundbreaking things that we're discussing. These are some of the basic things that you should know, but you may not be thinking about. You want to make sure you're thinking about every aspect of the process when you're in it. More than anything, consistency is what's going to count. Consistency matters in the home buying process. So make sure you're consistently paying your bills. Make sure you keep your jobs. Uh, if you're getting raises, that's good. And we know, hey, this economic climate, there's a lot of things going on. There's a lot of moving parts. But I promise you, if you're disciplined, this is something that you can do. And if you consult with the right folks, whether that's your lender or your real estate agent, we're here to help guide you through the process. This is not our first rodeo. This isn't the first time that we've done this. And quite honestly, I've said it before, we could probably write memoirs on all the different scenarios and scenes that we've come encountered out there. So my guess is your situation probably won't be new to somebody in the process. A lender, a realtor, a banker, somebody has seen it and can probably counsel you or coach you on the process. Another thing we've seen, and just keep this in mind, try not to drop a whole lot of money on getting your credit repaired. We've seen people lose money trying to do that, but just be disciplined. If you're disciplined, if you set out a game plan, talk to somebody. That's the main thing. Talk to professionals. Talk to more than one too. Get more than one perspective to see exactly what you can do to put yourself in the best situation to have the best credit score, so that you can purchase your first home. Or even if it's a move up or a move down, it's still a big ticket item. You want your credit score to be right. Hey, thank you so much for joining us on today. If this is something that has been beneficial to you, don't keep it to yourself. Share it with somebody else. Again, every Wednesday, 12:15, right around lunchtime, a 15-minute lunch break, and we go over these real estate topics pretty quickly. Next time, feel free to throw something in the chat and give us some comments. Please like, share, subscribe, go to our YouTube channel. Past episodes are there. Thank you for joining us on today. This has been Terry for the Weekly Home Workshop, and we will see you in the very next episode. Take care, stay safe, and have a good one.